People are quick jumping in here. All right, who's joining us? You'll see a few of you from the team. We should have a bunch of new people today, which would be nice. Joining in, I think, on Zoom here as well as YouTube, out in YouTube land. Can everyone hear me all right? You guys should have a chat. Since some of you are new, just so you know, you can change your chat settings, guys, where you can post the chat so all the attendees can see instead of just panelists. If you want to, it's a little bit easier to stream the conversation that way. But the audio is good. Kaliji, what's going on, Steven? All right, thanks, guys. It's good to know. All right, I got so many windows open. How's everybody doing today? What's everybody trading? I have Alec on with me today, guys. Also, we thought we would do. Some of you may or may not know we had a podcast called "Buy or Sell What the Hell," and that was on the Bitcoin Podcast Network. It still is, but we want to do some live streaming similar to the same format as we did with the podcast, but also we can do more interaction here in the live stream. We can trade together. We can cover more ground. I can talk to you guys, can ask questions.
But yeah. I think for trading, it's a little easier for people to see your charts.
Yeah.
Otherwise, they're having to take notes or something.
I know it's tough. I know, right? There's so many times where we talk about where we're at in the market, and it's really hard to explain just to the listener. So I don't know. I think this is a good blend. Maybe we'll call this like live podcasting. I don't know.
Yeah, I think that's a thing. Well, it's got to be for trading.
Yeah. But anyway, we can always stream these for people too, or record it. So if you're in the gym and you want to catch up. What I thought we'd do today, maybe we'll go a little bit longer. Sometimes we'll do a webinar and I have a specific topic that we want to teach on. And then a lot of times we'll just keep it casual. So we have a live trading team, guys, that we trade Tuesdays and Thursdays together. That's where I do a lot of coaching and mentoring. And that's a pretty intense couple hours. So we kind of have a blend of that when we get together like this. But today, Friday, it's tough to trade through lunch throughout the week, but Friday especially is just kind of slow. But we can just talk about different coins. I do have a couple trades going on. I wanted to just talk about what I thought was important in the markets here, Alec, and then we can talk about kind of what's going on this week. Maybe some stuff about consensus or whatever you wanted to hit on.
Yeah, a lot happened in the last few weeks. Last few days, actually.
Yeah, and we haven't really done a podcast to keep up. So, well, I kind of got to flip back and forth. So, in our crypto room, we just talked about this is kind of a tough patch in the market when we're talking about BTC. I have the gold chart up over here on the right. This is gold futures on the left is CBOE futures. And long term, we're still in a bull market, but we actually came into a pretty important cycle right in front of 10,000. I'll show that in a second when we look at some of these sine waves and some of the cycle work that we do. But right now, I'm in a short via the intermediate near term. So we like to break our trading up into multi-durations, but 3 main time frames. So long term, we're net long our portfolio of crypto. You know, I'm positioned for the long-term long across multiple names, right? Probably 18 different positions at this point. But that said, we can still trade around the near term and the intermediate term. And right now, we have an intermediate term downtrend that changed guys up here kind of when we went through 9100. Let's see if my drawing tool works. Well, this is much easier than on the podcast. So here was the uptrend. if you guys are listening to the podcast a couple of weeks ago, we talked about this real money candle here was big. This was a big short covering rally. This was an igniting bar that started this whole up move into the 10,000 level right up here. So we double topped up here. And then what mattered on this uptrend was these higher lows, right? So right here, we ended up breaking that earlier in the week. And now we've kind of set off this intermediate term downtrend that's been in place all week. And then you have near-term downtrends also inside of that here. You actually had an uptrend on this day for a day trade. So there's always different trends. There's always different flows within the different time frames. But that's what's going on. So today, there's probably going to be some decent action over the weekend. But I came in short earlier in the week, covered last night. I thought I was really trying to cover right in front of 8,000. I kept missing. I think I ended up lifting like 80.50 and then just reshorted a little bit just like an hour ago with this 30-minute cycle. But what are you guys doing in crypto today? Kings or Nick's doing ICX on Binance. You're getting wrecked on the long side. Mitch is on the sidelines. That's all right. I actually cut a lot of my risk last night. I didn't like that Litecoin was breaking. I didn't like that BTC was breaking down. And so that's okay to go to the sidelines. I mean, I always just make the comment that if you see the train coming down the track, so if we have an intermediate term downtrend, it's always easier just to move to the sideline, let the train go by, and you can always get back on. This has kind of been a rough patch, though. Hey, what's up, Santiago? How are you, man?
Do you want to maybe show for people that didn't get that alert the other day, what made you kind of start thinking that?
Oh, and
Some cash on the
10,000.
sidelines,
Yeah, let's look at that cycle. So I was doing some cycle work this morning on Litecoin. This is kind of a good example. So, we're big into the 8.6 frequency. This is a derivative of pi. I've taught about this a lot. So pi is the perfect cycle, right? If you take 3.14 and for example, 8.6 years is the global business cycle. So it's 8 years from peak to peak or trough to trough. So you have 4 years down for the most part, 4 years up. And inside of 8.6 years is 3,144 days. That's actually pi times 1,000, right? So this 8.6 frequency is very common. It exists on the yearly level. It exists on down to really the 5-minute or the 1-minute chart. So there's lots of different types of cycles, but the sine wave is one that is very good for turning points. So we kind of keep track on the 8.6 monthly sine wave doesn't bottom out till we made the high in January, or excuse me, we made the high in December, right? This is DECE. So 8.6, that's Augie or September, right? When you're trading in the bond market, you wouldn't say August. It's too long to say. So when you're on the phone or you're standing in the pit, it's Augie. It's DECE. Like I need to find a bond 3 3/4 of DECE 14, DECE 2014, or Augie. October is AUK. So I don't know. Sometimes that lingo comes out, but Augie and September is to the next big monthly cycle turning point. It'll be interesting to see. Maybe the market rallies in front of that, and we get a major. Maybe we get a double top here, right? Maybe we get back to. Well, this is the Litecoin chart, but it could be the same thing on BTC, right? Maybe we rally. This would be a pretty quick rally to get all the way back to 400 by September. I think it's probably more likely that we still base through the summer, and then maybe we get another, maybe we start the new uptrend towards the end of the summer.
It's pretty much just like last year.
Yeah, this is what happened last year, huh? So, well, we'll see. We don't have to exactly know what's going to happen next, but that's something to think about. Here's the weekly sine wave, and I'll show you guys on BTC because Alec, that's what you were asking about. I just had this up from, I was trying to do some work on Litecoin, and I cut my risk a little bit last night. So here's the weekly 8.6 count. It did a good job in the highs, and then it actually grabbed the lows here also. And then we basically, the cycle turned a little bit before, I guess we pretty much bottomed the same time. You guys see that right into the pie line, which is the screen line. And then we did have a little bit of a rally. So we're coming back into this next week, May 19th, May 20th, right here with the daily sine wave is actually another big turning point. This is so much better, isn't it, Alec, than having to try to lose people on the audio?
I think it's better for, I think it's better for whoever's listening.
So I think next week's actually is going to be really interesting from a time perspective. And then here, let me just show everybody on BTC. It actually, the daily cycle on BTC is really pretty spectacular, actually. Hopefully it's saved. I might have to redraw it. I don't know if it's saved, right? Try to load the other one. Magnus, you shorted underneath 10,000. Nice job. So are you covering now? 8,000 is kind of halfway between 6, you know. It's not a bad place to be taking some profit. The turning points have been on the 6th of every month. That's interesting. I'll show you this daily wave, guys, has been pretty much lights out. We've had 10 turning points out of the last 11. I mean, I don't know if it's saved. I'm gonna have to redraw it. I don't know why it does that sometimes. Do you know why, Alex? Sometimes I'll save it. Sometimes I draw the cycles in and I lock it and I save it, and then
Coinergy has a few little bugs here and there.
Yeah, there's quirks. Well, for those of you guys who want to play around with this, it's not an exact science, but the thing that I try to do is every coin or every market, it'll fall into a different rhythm, and it won't stay in that same rhythm, you know, into perpetuity. There's going to be times where the volatility shrinks or the ranges tighten, and it's just like anything else. You're gonna, you know, everything cycles at a different rate, but when you do fall into a rhythm, it can continue for a while. Just like you can have a particular set of waves in the ocean, you know, might last an entire day or a whole tidal set, and then 24 hours later, you know, something changes. But that's not what I meant to do. Here, it'll just take me a second. So what I like to do is you come in here on Coinergy, you can grab over here this sine line, and then I try to find the rhythm basically that will grab the most meaningful highs and lows and see if that makes sense. Now I also count out that 8.6 frequency. And so I've just drawn this a bunch of times so I know what it looks like here. Let me change this so it's a little bit easier to see. All right, so I've been really touching on this a lot. Have you guys seen this yet? For those of you that are in the chat. Magnus, you like 7,200 as the bottom? What makes you think that? I don't disagree. I mean, I'll be starting to think long as we get closer to 6,500, 7,000. But look, so here, guys, here on the All right, we produced a high with the cycle. You produced a low right here, December 22nd, at the bottom of the cycle. It had another turning point here. You bounced first into a lower high, but experienced another lower high, another turning point off the low into this cycle low. So this was another turning point right here. I'll just draw this out. Another cycle, turn, 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 turn. Right? Major low into our pi line right here, this green line, that's pi. Right? That was a turning point. You had another turning point here, right in line with the cycle. Another turn here, right in line with the cycle. Small bounce in front of pi again. Produced another small turning point, a lower high relative to this high. And then another cycle major low right here. I mean, this is one of the best rhythms I've ever seen in trading. Now, this cycle did not produce a turning point. This was the only one that we didn't get in this stretch. And then if you listen to a couple of episodes back, we were talking about coming into this cycle here, right in front of the 200, right in front of the big hole number, that was a place where we could definitely see a lower high. It made sense to take profits if we were long. I mean, we were signaling buy. We were signaling buy the majors here. We actually were buying Cardano and some of the other alts we liked the day before. And so this was here and here. These were good spots to take some off. And then like Magnus going short, that's a great place to short. We hedged a little bit for some miners up there. And then now, so this is that May 20th, 21st time frame next week, guys, that the next cycle is. And it's actually interesting that it's kind of right in line with pi again. So there's a good shot that we'd get a turn here. We'll just have to see. But it's important to just you got to know where you are within the cycle, because that's keeping track of the time component. Time actually matters more than price. So that's good stuff though, right? Alec, have you ever seen a cycle like that?
No, I mean, it's pretty clear when you look at the chart.
It's just amazing.
Yeah.
And so there's a lot of other charts that are kind of lining up at the same time frame. Yeah, that's true, Mitch. All right, Magnus, that's cool. Oh, Steven, okay, so I answered your question. You're kind of wondering, how do you know where to start the wave? Yeah, like if you try to do it here, if you tried to chart this high and then try to put the cycle with this high, that was just, it would have just been way too fast. You would have said, man, that's not really lining up. But this is clearly the rhythm that BTC is in right now. And then if you were to put the weekly, so I'll just show you guys this. So when you want to do the weekly, hopefully I can do it quick. If you try to go out longer term on your cycles, you kind of have to sometimes use the log scale. But so you just grab, I mean, this is a longer term wave, right? So just grab right in the middle. And then you can also count out 1, 2, 3, 4, 5, 6, 7, 8. We've actually bottomed, right? We bottomed. I don't know if you guys knew that. I've kind of touched on that before. 8 weeks from the high. So that's your cycle there. So sometimes when you look at it, when you first glance at it, it's kind of seems like a lot going on. Sometimes you want to kind of take your moving averages off if that's helpful. You know, get rid of some of your RSI or kind of just move this stuff out of the way. But again, this is, you know, these cycles exist. So here's your high, there's your low, and then sure enough, you got another low right here, right? So that's 8 weeks down. And again, it's 8.6. So sometimes you get a low on the 8th week or the 9th week, but it gets you close. So if you count from here, it's 1, 2, 3, 4, 5, 6, 7, 8. And you got another low. So we're coming into the, if you want to call this 8 and then start the count at 1 again, or if you want to call that 9, but 1, 2, 3, 4, 5, 6, 2 more weeks brings us into the weekly cycle down here. All this is lining up the end of May. I wouldn't be surprised. Maybe we have another 2 weeks down. That kind of puts you in line with that 7,200 area. Maybe we want to retest right in front of 6,000 again. Certainly possible. All right, and then from there, it's going to be key. There's a lot of risk below 5,800. If you were to break 5,800 with this turning point, then that tells me that we're going to go a lot lower into this cycle low. Not in August. And again, August, September lines up with the monthly cycle. If we hold here, then you can think about a rally into August and September, right? Or at least into this, most likely into the turning point here, which is takes you into let's see. Takes you into June. Anyway, I like to do some of that work when you get some time and the markets are a little slower. Alec, do you want to hit on consensus stuff?
Yeah, and King Nick in the chat. Coinergy uses TradingView, but Coinergy has more different altcoin pairs, and you can plug in your API so you can trade from an exchange directly on these charts. Makes it a lot easier.
Oh, nice.
But yeah, I mean, there's a ton this last few days alone.
What are some things that stuck out in your mind?
Did you get to watch any of it?
I did a little bit earlier in the week, and then I just was too busy.
Yeah.
What was sticking out with you?
I don't know. I mean, there's a lot from the larger coins. I didn't really watch any of the smaller announcements, but like even though the Ethereum founder boycotted it, there's still a lot of Ethereum news. Like, or you could
boycotted it. Lewin or whatever was there, right?
Yeah, he was. Yeah, but
is he the one that got in that little debate or back and forth with Song or whatever his name is? What is he, a miner or something? He was one of the original.
Is it? Yeah, big Bitcoin supporter. I think he's a partner at Blockchain Capital.
Oh, okay, yeah, or Block One.
Yeah, yeah, and then you saw the CME release their price ticker for Ethereum.
Oh, did they?
Yeah,
I think they're just lining up for the futures here soon.
That's got to be what it is, right?
Yeah, I don't know why they wouldn't. There's so much demand. I mean, I don't know how much work would have to go into it. It's the same work that went into BTC. It's gone really well.
Yeah, it's following that same path.
Well, that's good.
Sense. Yeah, I mean, there's a lot going on for Ethereum lately. Everyone's too busy chasing these other coins all around the place, but then you have the CME with the ticker. You have all the development updates, Casper, sharding, and then you had Amazon Web Services announce that one of the consensus startups that uses Ethereum is going to be available on the Amazon marketplace.
Oh wow! When's that going to be there?
I don't think they put a date.
Huh. There's so much to keep up with. What about you guys on the chat? Is there anything stuck out with you guys? Did you follow consensus? Maybe some of you were there. We kind of opted out of that one this year. There's a lot of people, man. 8,500.
Yeah, I think the venue is a little too small too, from what I've seen.
And then it just takes you out. I mean, it's a whole week of being away from the business and trading. I mean, what's that, Doug? Oh, can you explain a bit about how to see the pivots? Sure. Okay. Yeah. So pivots, I guess, lots of people want to, I guess pivots gets thrown around a lot. So you can have a Fibonacci pivot. Just using math, you can come up with a system that gives you pivots that may or may not actually exist in terms of what the trend is doing. When I talk about a pivot, I'm just literally focused on where the highs and lows are, relative to the trend. So that's really how you define an uptrend. So I'll tell you something right now. I mean, some of you guys are more experienced traders, some of you might be new, but do not use moving average crosses for defining a trend. So example, here's the 8 going down, and you see this is the 30. Okay. And you see they cross here. Moving average crosses, the media likes to talk about them all the time, like the death cross. So I saw that on Bloomberg the other day. It's really very novice, actually. I mean, when I first started trading, I tried to do systems around that too. It's just kind of I don't know, it's an easy thing to kind of try, but they're so lagging. There's better ways to do it. But a moving average doesn't define the trend in the true sense. Okay, so an uptrend is just defined by higher highs and higher lows, right? Higher lows and higher highs, right? This high is higher than that high. This high is higher than that high. Sideways range trade, you have equidistant highs and lows, right? And then downtrend is obviously the opposite, lower lows and lower highs. Now, you can look at a rising 200, and I call that when price is above that line, we call that being in the northern hemisphere. Okay. And then especially the pi line, which if I pulled the chart back, this line would continue like that. So that's indicative of a bull market. You're going to have price above the longer term moving averages. But again, I mean, I've talked about this on the podcast before. Let me just drag this pi line. Can you guys see that, the green dotted line? Some of you may or may not know what the pi line is. But lots of people want to get bearish just around moving averages, and that's kind of foolish too. And it doesn't work out well. Like if you wanted to be bullish because you're above the 200, and then you want to flip and be bearish because you're below it, lots of times people get trapped right here. So everyone that's getting bearish here because you're below the 200, even though the 200 is rising, which is showing you the long-term bull market, these are areas. So we like to be long here, and everybody else gets trapped. I've shown that before in a lot of markets. The same thing happened on Brexit. But you want to treat the moving averages as areas, and it doesn't necessarily matter if price is above it or below it. What matters more is the direction of it. But to create the pivots, it's about identifying the higher lows. So the question is well, what higher lows matter? Is it these higher lows, or is it this higher low, or is this a lower low relative to that low? So you can kind of be confusing, right? So I teach my traders we tend to look for the higher lows at or near the 30, or what we call the bands. So that's the other chart I have saved when you see that wave formation. And you get a higher low pretty much right in line with the bands. But that's the higher lows that matter. And then so right there, that was the pivot that broke. We call that TMS in a model. And so over here, we're all higher lows. This is a higher high. This is an equidistant double top where you actually failed. You failed to get above. You failed to make a new high right there. I guess I put that in yellow because it's more neutral. And then here you actually had a lower high relative to here, but you didn't break to new lower lows until this low right here. This broke that prior higher low. So that's where the trend changed. When you got confirmation of an intermediate term downtrend that's been in place really this entire time. Now this is a higher low. Again, we stopped making lower lows relative to here, but you still don't have higher highs. So when we talk about the big picture, This is what I mean. This is double top. This was the lower high. That's a pivot. Then it moved down to 12,000. We've talked about that for forever. And then when you came off this low, this was a time where we were kind of either putting in the process of a lower high relative to this high, right? And that creates, you create the pivot, Doug, when you move away from it. Because until you move away from it, you don't know that this high isn't going to continue to 12,000, which was the prior pivot, right? So in this process, you don't create the pivot till you move away from it. And then that, in our model, creates the pivot. So now to really turn this momentum back to bullish, the longer term, before I cared about 12,000, now I don't care about that level. Now I care about the 10,000 level. So if you get me above 10,000, guess what? We have a new higher high for the first time since December, because all these other highs this was an equidistant high. And then all of these subsequent highs, you can just watch. It's like a bouncing ball, just bouncing to lower highs. And when you change that trend, that's going to be confirmation of a new intermediate term uptrend, and then the longer term higher highs again. That's going to be very bullish for the market. But that's how I define the pivots. It's based on what we call the technical market structure. Alec, you got all that.
Yeah. Thanks to your drawings.
There's been some pretty good trades, guys, in FX. We've been making a lot of money on the euro lately. We've made a great call about the dollar bottoming. I've been pretty loud about it. All my traders know we've been setting up for it for a while, since 125, and it's just all in line with our stuff. I mean, euro failed at the long-term spot halfway from the move down from 2014. You look at the dollar index, you held pi. There's tons of opportunity to be long dollars this month. It's been a really great trade. Here we can see we held that trend that started. This long-term bull market started in 2014 and held exactly where it should have, right here at pi. And here, guys, here's another example of what I was just saying. Did I flip over to this chart? Yeah, I did. Look at this. This is, again, look, notice how the 200's rising, right? That's showing you the long-term momentum. But to get bearish, just because you're below it, congratulations, you sold the low. Same thing to start this year. Everybody wants to just look at one factor because they have no model. Most of Wall Street does not have a model, or most of the brokers, or half of the old wall does not have a model and a process. They just want to talk and just emote their opinions and storytell. But being short, just because you're below the 200, got you in a lot of trouble down here, right in front of our pi line, which is a cyclical thing. So when you go from a high from here and you cycle all the way back to pi, this is a time to be thinking long. And that's exactly what we got. So everyone, this is one of the biggest crowded short positions in all of finance and trading, was short dollars. And sure enough, the majority usually has to be long. I think this is just the beginning. This is just like the first initial move up. I think we'll be back to 102, 104, probably at a new high, actually, over the next couple of years. But so this has been a good trade. That's the weekly chart. I mean, there's been lots of moves. You know, I was taking profit this morning again on the euro. This morning, you want to take profits in the lower lows. I guess I'll show that over here for you guys. So, you know, that's what's nice about our model, is you can apply it to anything. I mean, anything that's moving. So here's euro kiwi. We've been short there. That's the 30-minute chart, and straight down today. I covered a lot. I'm still course short. So we were making sales up here. I covered into this little move down right here. We bounced back up here earlier in the week, made some sales. Now you're, again, this is a spot to be covering. Daily cycle still coming down. I keep these charts a little bit clean just because it's a pain to always to put the indicators on. I just use my charting on the other stuff. Use this, just need to execute over here. I've covered a lot of my core short. We had a pretty good, we sold the highs up here, pretty much the dead ass high actually earlier in the week. So you're back near pi 16, 17. This is a spot to kind of be covering. I mean, I like to kind of take down a lot of risk into the weekend anyway. But it's been a good week. Is some of you guys in the chat trading Forex? Santiago, am I looking at gold? I mean, you know me. I'm just hedging it a little bit. A small long in gold when the euro gets like it is right now, a little bit oversold. Is that why you're asking? So here was our short call earlier in the week, guys, right into the bands on the 4 hour. I mean, look how beautiful that is. It's not rocket science. It's just a matter of you got to put it all together, the trend and the cycles, and know how to work your position size. But we were fading that. Actually, I took risk off the day before and then let it come back up and then started hitting it again. You're long. I mean, you don't have to get too long, guys, on gold, but yeah, this is a good spot. I mean, the edge is not to be short right here. The edge is to be a little bit core long. If you back this out, it's a pretty good trend here. And all the technicians are going to have this trend line, right? If you do a standard deviation, this is the right spot to look for a higher low, and then it's right in line with the pi line, right? So the daily cycle is low. So anytime we're really heavy dollar longs, and so what is gold like? Gold likes dollar down. Gold likes rates down. Well, right now we have rates up, right? The 10-year has been moving through 310. So we have rates up and you have dollar up. Gold hates that. That's why gold's been selling off. But anytime the euro gets oversold, gold is a good hedge against your dollar long. So if you're short euros, right, means if you're short the euro and then you're long the dollar, if the euro is oversold, like here is where you wanted to be heavier, now you want to be taking some profits, right? So when the euro gets oversold, it makes sense to nibble a little bit on gold. And then if you get a little bit of a euro rally, which obviously means dollar down, you probably get gold up. So yeah, I mean, I agree with that, Santiago. Yeah, you know, I've been these little buys here. I've been a little bit long. Where am I here on this chart over here? I've been working in and out of that. It's a good question. I mean, long gold in your portfolio is always a good thing, you know. Anything blows up in the world, gold usually is gonna have your back. It's just times like this when the dollar gets really bullish, you got to be really careful. If we break pi, I mean, I'll just probably take off 90% of what I have on and just wait and try to, you know, I'll start a long from lower. I don't know where that would be.
So how long do you think until Bitcoin's going to start correlate with these other global markets?
Yeah, that's a good question. I don't think until the institutions are really in.
Mm-hmm.
It's kind of, some guys were going back and forth. What's Trump talking about now? Is this supposed to be Korea stuff? Okay, I didn't see what he was up to today. Probably won't move the market that much. Yeah, like I don't think a lot of those correlations are going to matter until the institutions have, because right now they don't have any exposure to it, you know. you're going to get those allocations when there's a big stock move and guys start selling their Googles and their Amazons and their Facebooks because they're all long that stuff, and then that creates different flows into gold, into the dollar. But they're not long Bitcoin for the most part right now. It's there's some hedge funds or some guys that are a little bit more flexible that maybe, but the institutions just aren't in this market yet, so that's why you don't really see the correlation. I mean, it is kind of trading like more of a risky asset right now, but like we've talked about before, if you guys are paying attention to what's going on in Europe, Draghi's already trying to figure out if he can consolidate the debts. They already know that they're going to have a banking crisis. The only reason yields aren't way above Treasury market yields is because the ECB is in there is the only buyer, and that's not gonna work. So you can see that Italy rates are already rising. We've been saying that for a while, that we got to watch the smaller countries around Europe and their bond markets. As rates go up, it's going to blow all these. I mean, these countries already are broke to begin with, including the U.S. But we've got the dollar. Our bond markets, our banks are completely different than the euro. The design of the euro was just never right from the beginning. They wanted one currency. They didn't consolidate the debts into one debt. It's just made for a disaster. And so that's the biggest problem with the euro. And it's probably part of why the dollar's been doing so well. And there's never one thing. I mean, you've got a lot of capital flows coming to the U.S. also, whether it's taxes or coming out of China. But you got to watch the periphery of Europe, because that's the same thing that happened when Greece became a big issue and the markets were really focused on that. I think you're going to see that. We're going to see that same act play out again. And once rates start to rise, and if there's no bid in the bond market, and before when Greece had problems, and then the market starts to look at Portugal, Italy, Spain, we weren't in a bear market. And now pretty much all bonds are in a bear market. I mean, you can look at the treasury market. Even when stocks sell off hard, bonds haven't really rallied at all. So I think the flight to quality is changing, where it used to be rush into treasuries long, right? If the riskier assets, quote unquote, riskier assets were going down, treasuries would rally. That's the flight to quality trade. Well, that can change if the crisis is in government and in the bond market, then the flight to quality may not be into treasuries. It may not be into government bonds. If government bonds is where the crisis is, what's going to benefit? You could actually see stocks rally. You could see private assets do really well. You could see cryptocurrencies do really well. At some point, all that's going to connect and align. We're not at that point yet, though. BTC is pretty much looked at like a riskier asset. That's kind of my opinion on the correlation. At some point, I think crypto will be a benefactor when we have a monetary crisis, and the system is going to need to be kind of reset in some fashion. Maybe that's on the other side of 2020, on the other side of the business cycle, because we got 18 into 2020, which is the bottom of the next turning point on the global business cycle. And then you got obviously 4 years into the next big turning point, 2024. Yeah, I think so. DIMS, so much of that going on, right? I mean, some of you guys are in Europe, you have a better feel for it. And some of my traders are a couple Italian traders. I mean, you guys have a better feel on that stuff than I do. I just understand the finance behind the financial risk going on with the Eurozone, and then I'm traded through Greece, and so I know what the market was teeing off of, and it was all about the bond yields. And we come in the morning and Greece yields were, the Greece bonds were down 10 points. Stocks were going to have a really shitty day. I mean, it was all about what the peripheral bond markets were doing.
I think you got a question in Zoom as well.
Okay. Hey, Steven, new investor. How do you know who to listen to? Everyone has more expertise than I do. They disagree with each other. Yeah, I mean, it's tough. I think I don't know. I think you got to find somebody with real experience. It's not easy to find. A lot of good traders aren't really teachers. They don't really want to share their model, and that's okay. It's kind of understandable. I mean, when I left, I was running a couple rates desks, and I taught several traders the bond business, and they're really successful now, and they're doing well. And I don't know. I just saw so many people when I started in the business at Schwab that nobody ever helps them with the timing piece. It seems like a lot of old Wall Street just is in the business of keeping everybody net long, keeping everybody in the market. They have no concept of cycles. They never say, hey, we have growth slowing, we might be moving into recession, you need to raise cash, take down your risk. They never tell anybody that. They want everybody to stay long and keep their assets with them. And so I watched so many people get run over. I mean, I saw it coming and rolling over in 2007, and try to help some people that would listen manage it. But overall, Wall Street runs everybody over every time the cycle turns, they get all crushed and run over. And so I helped a lot of institutions trade around our model. I'll just show you guys some of what we used to do. Kind of had it teed up. I was thinking about it the other day. So I would call on the sell side banks and work with hedge funds, and we're just helping them with the direction of our model, because a lot of traders, they were managing their book on relative value or just trying to trade the positions that the bank had, but they didn't know how to day trade. They weren't good trying to guess where the next 10 ticks and tens were, how to trade the trend. But like I had one of my bigger clients was a swaps trader at Citi, and he and I had traded together every day. He was a big trader. I mean, I'd be long 200 million tens for him. He'd probably have $1 billion position on. And if you guys know, so per every 1 million. So like, this is some of the work that we would do. I wanted to share this with my traders the other day, because I was trying to encourage them to work on their trading journal. Like, you got to treat trading like a business. If you're not keeping track of the score, if you're not keeping track of your, number of trading days, the number of winning days, your number of losing days. I mean, this is stuff that I would always do. Every day you got to be on top of your business. So, I mean, this is just kind of a good example. Here I'm keeping track of the winning days. And so, Steven, I guess if somebody hasn't been through this experience, I mean, I see a lot of people in crypto, they say that they were on Wall Street and that they were a derivatives trader, and it's bullshit. They were like in a back office, nothing wrong with being in the back office, but they weren't on the bid for 200 million tens and taking real risk. I mean, I would trade billions a day, and I know what it's like to be the entire bid in the entire treasury market. Like, I was the entire bid in the entire world. And I know what it's like to get hit. I know what it's like to get lifted. I know what it's like to get partial and try to get filled. I know what it's like to panic and try to get out of a position. Not a lot of teachers or people in the space will do that. Not a lot of people will trade live, make calls, and do it day in, day out. But this is the stuff you got to do if you want to you can treat trading like a hobby, and it's going to pay you like a hobby, or you can treat it like a business. But see, I'm keeping track of my win rate, my loss rate. I think I had 2 losing days here, it looks like. It's really hard to do, but this is why the banks would trade with me. So I sit down with the swaps guy, And I'll just show you guys over here. It's a little easier to see. So in the bond market, 1 million, if you want to buy 1 million tens, let me do it in yellow. If you want to buy 1 million tens, for every tick that the bond market moves up, every tick is $312.50 per 1 million. All right, 312.50. All right, so here's the Treasury futures. Right, this is a weekly chart. Let me go to a daily. I'll go to a 5-minute. All right, so if you came in and you got long treasuries today, you came in at 118.16. So 16 to 17, that's one tick. All right, so if you were long a million tens and you moved from 116 to 117, that's $312.50. All right, so I might be long 10 million tens, was pretty good day trade, kind of maybe an average size for me. So if you know, if you move up one tick on 10 million tens, that's $3,000 right there. All right, so if you catch a 10 tick move, I mean, this wasn't a 10 tick move. Yeah, it basically was 118.16 to 118.26. So you catch a 10 tick move, you know, I've had $30,000-$50,000 days. But the trader that I'm trading with at Citi, you know, I only made money if I traded well. I didn't have a salary. I didn't get paid by the bank. A lot of these traders on Wall Street, they get their salary and then they get a bonus, and they're not risking their own money. I had to risk my money every day. I mean, if I had a bad month, I didn't get paid. If I lost money, I'd have to make that money back up the next month. The guys on Wall Street, for the most part, they can take a bunch of risk the bank's money. If they blow up, they just go to another shop. They get fired, they still get their salary, they go to another firm. So my guy, if like the swaps guy I was giving an example of, he might be long 100 million tens. So, you know, you make $300,000, $600,000 on a 10-20 tick rally. And so we would sit down and do that every day. And I don't think there's that many people with that experience in the crypto space that are, I mean, I haven't met anybody, to be honest. I don't know, Steve, that's kind of a long-winded answer.
It's a good one though.
Yeah, just it's all about experience. There's a lot of time in the chair. It's just I just been at this a long time, and there's a lot of losing days, a lot of really tough days, and so we work a lot on the trading journal. It's about getting rid of your mistakes. It's about 80% of trading is really psychology, and so you got to do all that work in your trading journal. You guys want to look at any more coins or any altcoins? I didn't really look at alts that much today. Mitch, the Fed would start accumulating their position now. They sent their representatives. I don't believe U.S. shares do much in the bond markets. You mean position in what there, Mitch? U.S. You mean on their dollar position? Yes, Steve, you're welcome, man. ICX, okay. Yeah, Nick, you were mentioned that one earlier. I actually got that one saved. I haven't traded that one much. Can we get it versus the dollar anywhere? Or versus Tether? There we go. So you guys know, I mean, I'd rather price if you can price a coin versus the dollar or Tether, it's going to give you a more accurate representation of what that asset is doing. Because you want to price the asset versus the money. Bitcoin isn't money yet. Bitcoin's still on the asset side. So if you want to price it in dollars stay relatively fixed in the short term, right? I mean, longer term, yeah, the dollar has been losing its value like rapidly relative to the last 50 years, to the last 100 years. I mean, it's been declining like crazy in purchasing power, but you're going to get a 50% swing in BTC. That's going to affect what your ICX chart looks like versus BTC, whether it's rallying or going down. So you can look at ICX relative to BTC. I'm not saying don't do that. I mean, we still chart things in BTC, but if you really want to see what ICX is doing, whether that asset's increasing versus money or decreasing versus money, depreciating, you're going to have a better feel for, is ICX really rallying, or is it BTC that's just getting crushed? You don't really know if you're looking at a BTC chart, but if you look at versus the dollar, oh wow, yeah, people are actually really bidding this thing up relative to how how many dollars I can get for it, or euros. It looks pretty good long term. I like that. Just like the rest of the market, experienced these lower highs going back until I guess maybe the end of April here, and you finally made a higher high. So technically you're in a new long-term bull market. All right, so that's bullish. You can see the lower lows here. This was the higher lows right here, right, within the uptrend. Just like BTC, right? This was the uptrend into December. And then you start to come into trouble here when you break that low, and definitely when you break that low. Now your intermediate term is bearish, right? So you follow those lower highs, that's kind of like your guideposts. And then boom, right when you get, which actually, this was a lower low, and then you stopped making lower lows here, and you had a triple bottom. That's your floor. And then sometimes you don't know if the floor is going to hold, or you're just going to base and then take another leg down, right? That can happen too. But as soon as so what you're waiting for is that trigger of the higher high to confirm, okay, now I got a new uptrend. So that's what you got right here at the end of April, beginning of May. So I like this chart longer term. That's in a bull market. It's kind of like the rest of BTC is, are we going to hold this 50% retrace of the initial move off the low? All right, you're about halfway off the low there. And then I do like that the cycle is low. I like that your cycle is low here. So kind of wait and see. I mean, if you're long here, ideally, if you took profit up here, then I'd be buying some back here, right? With the cycles low, looking for a higher low somewhere in this area. Just kind of depends on how you work into it. It may make sense to time it up with next week, with the bigger picture cycle. You can look at it versus BTC. So here, you can see here versus BTC, since Bitcoin's been falling, the chart actually looks more bullish than the chart versus the dollar, right? It's still holding the bands. I bet if we look at the bands are these blue lines that I just threw on there. And then you see here versus the dollar at 350, you're trying to hold on to the bands, this is a good place to be long. Like I said before, this is a good spot to be adding back. But you can see how you're already below the bands, and then versus BTC, you're above the bands. So that's just showing you that you're pricing this in the denominator as BTC is falling. That's going to kind of artificially keep this amount higher. That looks good. I mean, I only have maybe 6 names that I would think about adding to, and this is actually one of the charts that looks pretty good. I would add that to my kind of watch list. You can see here's a 4-hour pie is just below the market, 320. So I'm not in a rush to add the longs right now because I'm kind of waiting to see what the overall market wants to do if it drifts a little bit lower. But that's pretty good. EOS is the other one I kind of like. EOS and 0x, I think, look pretty good, guys. They've had a good run. They've been EOS and 0x. 0x has been two of the strongest charts out there. Obviously, we were buying back here in April. There was a couple other ads too, but then we took some profit in this rally. But you're right back at the bands. You've had a 50% retrace of this move up. This is cycles low. This is a prime location for where you're probably going to get a higher low. You might go a little bit lower again with the market into next week, but you don't want to be chasing new highs. You wanted to be coming out of some long. Now is the time to add back for sure. And so this was my last sell versus BTC up here. It was a good sale. Now I'm looking to add back. And then 0x. Alec, what do you like? What do you like project wise? Or
I think you hit a few of them. I think
Enigma last, right?
Yeah, Enigma I like a lot. They just had a pretty good presentation at Consensus too.
Nice. Is there on-demand video for all that stuff?
I don't know if they released them. I was watching it live, so I didn't really check. I assume, right?
Yeah. I mean, I would think. I mean, I'm almost kind of surprised they streamed the whole thing. So why wouldn't they do some video on demand and get people to come back to their
Yeah. I think someone wants you to look at Aeon.
Aeon? Yeah, I like that name a lot. I did listen to Matt speak on Monday or Tuesday, whatever it was. Got 0x here though too, same thing. Cycles low right at the bands. We added yesterday. I'm gonna add to it again. I'm just waiting to hit it hard. So sometimes you can buy what I call the left hand side of the chart, and sometimes you want to wait for the right hand side of the chart. It's easier said than done, but the point is that when you're pulling back, you can scale in once you kind of learn how to scale in. The first step is learning to identify certain bullish setups that I teach my traders, like a bottoming tail, right? And then you take out the high, that's a setup where you can buy. You can buy at the top of this. You can buy as soon as the high is taken out and your stop goes below the low. That's a buy setup. So you can wait. Sometimes you can wait, guys, for some sort of bullish event, like a bottoming tail here, and then buy that. And so in other words, you wait to let the market prove itself. So maybe back here on 0x, this is a pretty bearish candle, right? But oh, wait a second. The bulls brought it all the way back, took out 50% of that big red bar after a big drop. Boom. I'm gonna buy that right there, stop below the low. And then you got some decent follow through. But that's a different type of buy setup that we use in our model. So sometimes you can scale in on the dip, and then what I like to do is get more aggressive when I see something form. But you don't always have to scale in. You can wait and let the market prove itself. If all you get is red, here, waiting for an actual setup, you're going to be glad you waited. So that's kind of a trade-off. Sometimes you scale in and you don't get the setup. And if you just wait for the setup, that saves you from scaling in. I like to do more of the anticipatory method, is what I call that. But anyway, this is something I'm watching right here. It's probably going to get a higher low. Aeon. There's a Binance. Where else is that? What else is that one? Do we have that one versus the dollar? Only liquid. Probably not a lot of data. Oh yeah, Cleedy, I'll do Cardano next. There was a lot of live streams. I like this name. It's such a new coin. I think a lot of people aren't really aware of it yet. It's going to take some time, but that's a good thing though. You can, this is one of those newer projects that seems like it has a really good amount of capital, has the right people behind it. It seems like there's really good leadership from what I've seen. So, if they can accomplish what they want, I mean, it's all about belief anyway. They might not even be able to to do what they want to do, but the market might believe that they can do what they want to do, and so the market will take off anyway. That's the thing with markets. It's not about the fundamentals, because what's really true doesn't really matter in markets. It's what people think is true that matters. So markets will move on anticipation. But we're basing for the most part here. And this is your long-term range. So I like working and adding and starting a core long down here. There's a little bit of risk if we can't hold $2. I mean, maybe you'll run some stops and go to like $1.50. But I think if you time this up patiently and you enter several entries, you can get a nice average down here. And there's no reason to think that this coin can't go to new highs and go to $10 easily. You're probably going to need another big run in the market, right? You're going to need another bull market for this to rally, but I like it down here. I think you can be a little bit patient. I mean, this is the same thing that's happening on Litecoin. Is we made this higher low. See, so this was the move off the lows. This creates the wall. About halfway is where you want to see the market hold. Sometimes you go a little bit further. Sometimes you have 100% retrace of that move. But the probability is that about halfway, when you're in an uptrend, you're going to start, right? You're going to start popping off these higher lows. So that was the first place to kind of see if the market held. That's a swing line buy set up in our model right there. But the fact that we're taking out this low and the market's still soft kind of leaves the door open for us to maybe test a little bit below $2 again. So no, we're long here. It's not a huge position. I like the chance to to build more down here. Obviously, this is the big pivot on the upside, $4. So you trade it around. I mean, if you're long at 2, if we get long at 2 and your average is down here and we get a rally back to 3.5, 4, that's a nice trade. I mean, you're already doubling your money. So I see a lot of this on the way to that, probably long term. And even if you break 2 and you have a big percentage move from 2 to 0, but from a dollar perspective, the closer you get to 0, at least you know where the floor is. So it's tough to keep a coin at or near 0 that's actually a real project. Well, let's look at Cardano, since Luigi was asking about that. And then is Olivier, is that how you say your name? Garcia? Do you teach just your students, or do you provide calls when you take positions? Yeah, so before I do Cardano real quick. So we're position here. We have Block Edge Capital, which is our digital asset management firm we're building out. We have a project that's in pre-ICO right now. We're going to be building a platform called Rhythm. But then my other company, when I left CG Capital, was an education company we started. And this is where I have my training model here. This is jenkinsrm.com. And so we have a private crypto trading team where I put it in alerts. I'm doing videos in there. posting cycle work, talking about day trades. We're talking about all the developments in the market. That's only $100 a month. So for the less than the price of cable, I mean, we've got some amazing calls. I mean, the same like 70 to 80% win rate I had in treasuries throughout the model, it still applies to cryptos. And then obviously crypto, we have gains like 200-300%. But we help manage the risk on the downside too. So I'm making calls to answer your question. I'm making calls in that room every day. Like last night, I was up at 10:30, 11 Eastern, cutting risk on my Litecoin trade because we had added, and I thought it was kind of breaking, needed to play defense. So we were talking about that. We were shorting futures. So all that's in this chat room. And then we also have a trading course. This is my entire 10 years of struggling with trading, going through all the mistakes, trying to figure out what works, what doesn't work. But everything that we used on the directional model and fixed income is I put this all in this trading course. It's 9 hours of teaching. We teach the 3 pillars, which is analysis, execution, and risk. You got to put it all together. So how do you view a trend? How do you view the cycles? What are the origins of the model? It's talking about energy and physics and why cycles matter and phase transitions and everything about kind of the origins of the model. And then once you understand how to analyze a trend and the cycles the right way, then the next step is, okay, well, how do I execute on that? Because there's a lot of people that can tell you where the trend line is, but man, they're terrible traders because they don't know how to work their position. You could be a little bit early and totally foul up the trade. You can be late, totally foul up the trade. Same thing when you're exiting. You gotta be able to manage. You got to be able to work your position and execute right. So execution matters. We talk about setups. We talk about how to work your position size. And then on the risk side, it gets into a trading journal. What's your max loss per day? What's your max loss per week? The psychology of trading. That's all the mental analysis. How do you get out of slumps? Are you sticking to your plan? Are you sticking to your word? All that stuff is on the risk side. But anyway, that's all in this course. It's $2,000. I think it's the best value that exists as far as access to a real institutional trading and teaching. I've paid lots of money to learn different courses. I paid 12 grand to learn Forex. It was like a 2-day thing. I got maybe like 3 techniques out of it. It doesn't compare to what this course is all about. But to me, it was still worth it. I mean, I got that money back in Forex many, many times over. Anyway, guys, you just invest in yourself. And then this is our live webinar. So this is more of my coaching clients or my mentees. And so this is where we trade together every week. And this is where you really grow. I mean, this is great to learn the model and do it on your own. But if you really want to trade for a living, and I've been free trading, making money from the markets, not taking a paycheck for 12 years, just earning money from trading. So that's where you really grow the most. You got to get inside the trades together, know what it looks like to flip and reverse, a lot of day trading. Yeah, so that's all right there, guys. At some point, we're going to roll that into, probably put this on the Block Edge site.
You could probably show them the chat room. Everyone's kind of asking about what they get out of it. And it's 150 other traders too that are just talking trading, development, news, everything all day.
Yeah. So guys, this is our River room. It's pretty good software. It's nice. You can get an app, on your Android or iOS. 1 second before I share, I got to flip over. All right, can you guys see that now? So if you go to jenkinsrm.com, on the top right, there's a chat room button. That'll bring you right in here for free into Trading Talk. and there's 1,055 joined members in here. So this is me. I get up, I'll talk about what I think's going on with the euro. I mean, this was me covering euros this morning, 7 grand. Been crushing it on short euro kiwi, euro pound versus the yen, euro. I mean, talking about GDP, anything markets in here. I mean, this is all free.
And
But then our crypto room is right here. This is the $99 a month. And so, I mean, we're talking about today, the guys are talking about the mobile, I guess the mobile app now, right, Alec, on Coinage?
yeah, and you could tab over to topics real quick too.
Oh yeah, so here's all our real-time alerts. So these are all our trades that our models has spun out recently. I mean, this is 8 days ago, 9 days ago. Cardano, Aeon, Zcash, Dash. I mean, we've been at this a long time. But so you can just come in here, you can get it on your phone. You're like, oh, okay, Jason's, he's short futures now. He's looking to cover in front of 8,000. Okay, got it. Doing an update on Cardano. So this is kind of what rhythm is going to look like. So we're building that out. They're pretty simple, guys, but that's well worth it. If anything, if you want an edge to help in crypto, that's a no-brainer to join this team. It's a great group though. We learn a lot. I mean, we got miners in here, guys working on tech, doing master nodes. Monero, where? Let me see if I have any other questions on that real quick. Oh, I got to do Cardano, right? Sorry, I always jump on all over the place. Let me do Cardano, and then we'll do Monero. Sorry, Cleed, I skipped over you. Sorry about that. Let's see. I can tell you Cardano. I'm not even looking at the chart, but I'll just show you. I think I took some risk off last night on Cardano. And so this is the value of the chat, guys. If you don't, I mean, I don't know if you're going to wait for the morning to get trade alerts or who's kind of, I mean, we're doing this stuff 24/7. We've had a really great call on Cardano. I was talking about Cardano as one of the best opportunities down here at 15. And that's exactly what happened. I mean, we had a really nice rally off the lows. This was one of our biggest positions. We were one of our best long ideas. What percentage move is that off the lows? 143%. I mean, you don't get these moves, guys, in treasuries or the gold market, euro. I mean, you get pretty good leverage, obviously, in Forex and in treasuries, but as far as the amount of volatility, this is part of why we started Block Edge. I mean,
yeah, I think you're showing the wrong screen.
Oh, okay, thanks, buddy. This is why we started Block Edge, just because there's this great trading environment, the amount of volatility here. So yeah, that's 140% move off the low, guys, here for 15. So we were all over that. Now from here, I took a lot of my risk off, probably 80% last night, and it's just temporary. I'm just managing my risk. So I kind of like to see how traders trade when the market goes against them, because anybody can put on a winning trade. It doesn't take any kind of skill. But when you're losing money or the position's going to go against you, how do you manage your risk is what really matters. So the last action we had was buying this dip, and this was a bottoming tail. It's the same thing I was talking about on some of those other coins. Basically, the market held halfway, but we didn't get any follow through. So that's meaningful. We had a bottoming tail here, but we couldn't take out the high of this candle. So you haven't had a higher high since right here, as far as taking out the prior candle's high. If you guys really look at that closely, each day has been lower than the previous day's high on a closing basis. So we tried to take it out right there. 6 days ago, and you couldn't do it. So we're still stuck in this intermediate term trend, right? And the problem with that is that if you buy here and you really want to increase your risk, you got to keep your risk tight. So my stop in the model is right below that low, and then last night we went below it. So I took off 80% of my long, and I'm just going to wait and watch, because if this does end up taking this low out, then I think the odds are that we're going to retest 20 cents, 15 cents becomes a lot higher. So I'd rather sidestep this 30% drawdown and come back in and have the cash to come back in and buy twice the amount or close to it, or buy more back down at these levels where we were getting long last time. And if the market doesn't do this and it fakes me out, that's okay. I'm not gonna cut my risk here and then never trade this coin again, right? So I'll come back here. Can always get back in, right? I can always get back in over here on the, what I call the right hand side of the cycle. But for now, that's just being disciplined. So I actually raised a lot of cash on this position. I'm just going to wait and see. Their cycle's low, the RSI is pretty low, but I've just been playing a little bit more defense the last couple days in case we do, revisit this. I don't know. Does that make sense to you guys? All right, cool. And I mean, on the upside, Luigi, we got to get back above the 8 to change this intermediate term trend. All right, then things will get more exciting again on the up. It's just not quite ready yet. Yes. What was the next one I was going to do, Alec?
Monero.
Oh yeah. Oh, Stan, thanks for putting that in there, buddy. I'll show you guys some results from some of my traders. Pretty proud of them. And one guy paid back 100 grand on his student loans pretty recently, trading crypto. This was even in the down market for the most part the last few months. Monero. Still like Monero long term for sure. What's happening here? I don't know why the favorite's not working. So let's go all the way through. Oh, this is painful. Yeah, Megastroke. We like to swing trade around the kind of our longer term core positions. Just depends on how you want to do it. I mean, buy alerts, you can swing trade it. We have some people that have full-time jobs at work. I mean, they'll swing trade, put a position on at night or at lunch or something, and then trade it for 2 to 3 to 5 days. We're putting out near-term signals. I don't know what's up with Coinigy here. I didn't drop, did I, Alec?
No, I think you're still good.
What's up with this guy? Refresh here. Oh, the servers are busy, huh? That's the first time I've seen that. That's cute. Monero's kind of experiencing the same thing as BTC and Litecoin. I like it near the lows where we held, but we might be cycling back to those lows. I like it longer term. I think you just be a little bit patient. Like I haven't bought anything back. I haven't done much on Monero since I haven't issued a signal on that in a while. Let's see here. 7 days ago, I might switch over to the screen. This might help. So this was the 11th. This is last week. So we started nibbling. This was the Monero 4-hour chart. You guys see that? Yeah. So these lows right here, I forget who was asking that. This 160 level is pretty major. You're probably putting in a long-term triple bottom, but I like, you back me up closer to 160. You want to be a buyer for sure. And then your risk is below like 150, but it's had Monero has a really nice cycle to it. It has a really nice rhythm. Whether you look at it like that, I mean, it cycles down, comes right back up, down, back up. It's just a more established coin. More people know of it. More people trade it. It has a nice flow. But you can see, this is even the chart from, this is the long-term lower highs, right? So we're still in that process of bottoming. And then whatever that level is, 280, 290, 300 is the new pivot. I've never seen coins you go down like that. Yeah, chat rooms 24/7. It's probably a good place, guys, maybe to wrap up since I can't get into. I guess I'd just show you maybe some of the results. I mean, you guys can do this. Whether you want to learn the course, whether you just want to come check us out on the crypto team, you're going to get more. You're going to get a lot of value out of that for sure. I promise you that. And so this is just, it's not just about me. I mean, I can show you if I have big trading days. That's not what's important. Is like, hey, can you actually help other people make money, right? So I've trained a lot of traders, but this is kind of some of the key is the consistency. I mean, some guys want to show how much money they made, but then they never show, what the last 6 months look like. But the consistency is the key. So this is one of my guys in the Forex side. He switched to this model and he was starting light, but look how much consistency he had. This was over 7 days and he's trading small size. He's a pretty big trader, but he was just amazed that he only had one losing day here of all these trades. It's a lot of green. One of my other guys, this is his futures account. He did $9,000 for that month. That was monthly statement. Jason, I want to really thank you for all your knowledge, the course, and the live trading. He really liked the consistency I've achieved with your model. This guy's, he's doing really well. I'm proud of him. $9,000, $8,000, $10,000. Trading, and again, he's trading copper. He's trading futures. Feeling more confident than ever. Traded. Thanks, Jason Mile. Awesome team. He's improved tenfold. His consistency. This is another one of my guys on the Forex side. We're trading Dragon, which is the pound versus the yen. He's having an $8,000 day. My first full week of trading JRM method intraday, I traded about 1/10 my normal lot size to get comfortable with things, but the size is not important. It's a consistency. That's exactly what I'm saying. You can always increase the zeros. You can always trade with more size, but the consistency is what everybody wants to get to, because then you can pull money out of the market for the rest of your life, and you can go wherever the opportunity is. If it's in bonds, if it's in commodities, if it's in crypto. and these guys were crushing it. The market was pretty hot, but 400%, 570%. There's more. I don't know what this is. Well, this is a European guys trading Forex. There's a lot of consistency there. Anyway, guys, come join the team. It's fun. Love to have you. If you guys have more questions, you could just come into that chat room. It's free. You can message me. What else, Alec? Pretty long session.
Yeah, I think you hit on everything. Yeah, the text alerts, they're push notifications on River, kind of like Slack.
Yeah, and you guys can subscribe to the YouTube channel. We're gonna do more of these live streaming events. We're just gonna treat it almost like a podcast, but better. And then I'd like to do it a couple times a week, and we could trade together. Maybe we get on earlier when the markets are a little bit more active. Yeah, well, that's it, guys. What is everybody doing this weekend? Alec, you got anything shaking?
Nothing too exciting. No, depends how the weather holds up here.
Yeah, this time of year in Florida, it's so rainy and it's pretty nice right now.
Yeah, it's like rain every other day here in Georgia.
I might head over to the golf course soon.
Well, all right.
All right, guys. Thanks for jumping on. I'll see some of you in the chat. We'll be on this weekend. And then don't forget, coming into some big cycle turning points next week, 20th, 21st. So be on your toes. Any text alerts to your phone for the trades, or you need to check your computer? No, we don't send them out via email because to me, it was just too slow. So we use this River app for now. Eventually we'll have a Rhythm app, which is our trading platform we're building. But until then, yeah, the River is easy because you just have it right on your phone. And so you can set the alerts, everything pop up nice and easy. All right, guys. We'll see you in the room. Come join us. Have a great weekend.
Yeah, till next time.
All right, Alex. See you, buddy.